fuel subsidy removal, and you don't have a substitution or alternative like stomach infrastructure or welfare package for the same people that you are coming up to lead. And even though I didn't hear her directly, but it was in news that the president's wife made a speech that Nigeria should not be afraid that they are not coming to loot Nigeria because they are already having money. They are billionaires or trillionaires. So people were depending on that speech. Okay, if you come up, at least if you're a rich man and you come to manage a team, you make your influence affect the people so that they will not have hope. So right now, apart from God, sir, the trend that we are seeing in our economic ecosystem does not promise any better show for anybody.
If we had a better structure, I thought I had some kind of stuff in mind to say geopolitical zones. And we had a plan that every geopolitical zone must have a power station, for example. That means we have a minimum of 6 strong power stations.
Yes. It's very important that we embrace these investors.
I think what they want to do now is to be able to make them understand that, look, going forward, it's no longer going to be business as usual. Whatever that may be happening in the past, we want to now be able to put a system in place that will checkmate, correct the ills of the past, give us a new pedestal from which to stand and operate going forward.
Officially, what we get in the country, 79% is from crude, foreign exchange, 11% is from oil, from gas, natural gas. Between the two of them is 90%.
If we are getting whatever it is we are getting from oil revenue today, you look at the oil revenue is more than enough to take Nigeria to her next level. But at the end of the day, the processes, the leakages, and so many things that have become like an epidemic on our economy will not allow whatever we are gaining or getting from this deposit or these blessings from God to give us what we are looking for.
The coming of Brazil now this time is important. Then first they have to organize a workshop for these herders, those who rear cows. This is why it's good for you to have your cows in a particular place, and these are things you do to feed them well, and they will equally have good meat for consumption.
The end of a matter is better than its beginning, and in the other way around, the beginning of a thing also can predict what the afternoon or the evening of that same thing would look like. With the trend that has not been curbed and nothing has been discussed about it, for instance, when you see a like fuel subsidy removal, and you don't have a substitution or alternative like stomach infrastructure or welfare package for the same people that you are coming up to lead. And even though I didn't hear her directly, but it was in news that the president's wife made a speech that Nigeria should not be afraid that they are not coming to loot Nigeria because they are already having money. They are billionaires or trillionaires. So people were depending on that speech. Okay, if you come up, at least if you're a rich man and you come to manage a team, you make your influence affect the people so that they will not have hope. So right now, apart from God, sir, the trend that we are seeing in our economic ecosystem does not promise any better show for anybody.
If we had a better structure, I thought I had some kind of stuff in mind to say geopolitical. And we had a plan that every geopolitical zone must have a power station, for example. That means we have a minimum of 6 strong power stations.
Yes. It's very important that we embrace these investors.
I think what they want to do now is to be able to make them understand that, look, going forward, it's no longer going to be business as usual. Whatever that may be happening in the past, we want to now be able to put a system in place that will checkmate, correct the ills of the past, give us a new pedestal from which to stand and operate going forward.
Officially, what we get in the country, 79% is from crude, foreign exchange. 11% is from oil, from gas, natural gas. Between the two of them is 90%.
If we are getting whatever from oil revenue today, you look at the oil revenue is more than enough to take Nigeria to her next level. The processes, the leakages, and so many things that have become like an epidemic on our economy will not allow whatever we are gaining or getting from this deposit or these blessings from God to give us what we are looking for.
The coming of Brazil now this time is important. Then first they have to organize a workshop for these herders, those who rear cows. This is why it's good for you to have your cows in a particular place, and these are things you do to feed them well, and they will equally have good meat for consumption.
The end of a matter is better than its beginning, and in the other way around, the beginning of a thing also can predict what the afternoon or the same thing would look like. With the trend that has not been curbed and nothing has been discussed about it. For instance, when you see a project like fuel subsidy removal and you don't have a substitution or alternative like stomach infrastructure or welfare package for the same people that you are coming up to lead. And even though I didn't hear her directly, but it was in news that the president's wife made a speech that Nigeria should not be afraid that they are not coming to loot Nigeria because they are already having money. They are billionaires or trillionaires. So people were depending on that speech. Okay, if you come up, at least if you are a rich man and you come to manage a team, you make your influence affect the people so that they will not have hope. So right now, apart from God, sir, the trend that we are seeing in our economic ecosystem does not promise any better show for anybody.
If we had a better structure, I thought I had some kind of stuff in mind to say geopolitical zones. And we had a plan that every geopolitical zone must have a power station, for example. That means we have a minimum of six strong power stations.
Yes. It's very important that we embrace these investors.
I think what they want to do now is to be able to make them understand that, look, going forward, it's no longer going to be business as usual. Whatever that may be happening in the past, we want to now be able to put a system in place that will checkmate, correct the ills of the past, give us a new pedestal from which to stand and operate going forward.
Officially, what we get in the country, 79% is from crude, foreign exchange. 11% is from oil, from gas, natural gas. Between the two of them is 90%.
If we are getting whatever it is we are getting from oil revenue today, you look at the oil revenue is more than enough to take Nigeria to her next level. But at the end of the day, the processes, the leakages, and so many things that have become like an epidemic on our economy will not allow whatever we are gaining or getting from this deposit or these blessings from God to give us what we are looking for.
The coming of Brazil now this time is important. Then first they have to organize a workshop for these herders, those who rear cows. This is why it's good for you to have your cows in a particular place, and these are things you do to feed them well, and they will equally have good meat for consumption.
The end of a matter is better than its beginning. And in the other way around, the beginning of a thing also.
Hello, good to have you on the program again today, and quite a pity we're getting slightly behind schedule, but it's all part of the work we're doing to ensure that we get on the best way we should. Here. We have things to talk about today. We have a topic that is a special one, really, I must say, and talking about the fact that there is this tax that we want to talk about today. As you can see, the topic as it's placed over us for us to see, talking about the 15% petrol import tax. I want to find out the impact such a tax will make on the economy of the nation, Nigeria, and that's why we're talking about it. And today I have a guest that is an expert in some of these things that concern the economy, and he's here to talk with me on the program, though via Zoom. Then I'm talking about the fact that I have Professor Ken Ife that will be my guest on the program today. We have him on Zoom, and the moment it's clear that we'll be able to hear him. But okay, I need to say that I will say welcome to Professor Ken.
Oh, hi, good morning, and thank you for having me.
Right. Professor, there is something that is in the air, this 15% petrol import tax. And, you know, people have asked me and say, of what use is this to this nation? And I said, well, I know a bit, but I know someone that knows a whole lot more. And that's why you are here today as our guest. And so we'll just pick the first one. We start talking before I say any other thing. Tell us about this 15% petrol import tax.
Okay, first of all, there is a background to this.
Yeah.
In 1960, we got political independence. Today, we have not got economic independence. And there is always areas to consider. We have sectors where God has blessed Nigeria with resources, mineral, agriculture, mineral, oil and gas. In this particular area, we reserve our inalienable right to add value to those so that we can reduce import dependency in this area. There are other areas of technology and other areas where we don't have comparative advantage. We don't even have the technology. We don't have the machinery, all of that. So when you come to an industry as oil and gas, the question you are going to ask yourself is, why is it? What is the explanation for the biggest producer of oil in Africa and producer of gas in Africa, the 8th in the world, is the largest importer of these products, and the refineries that they built are all dead and buried? So why is it continuing to be like this? The answer is not far-fetched. The answer, part of the answer, apart from other things, the most critical is this: investments are not coming into this sector because they are worried about the balance. There isn't a balance. There is a price. First of all, if you want, there has to be parity. In other words, import price of PMS and AGO. The import price is used as the price benchmark. Let me explain this. Somebody has produced this refinery product abroad. They've made their money, they made their profits, and then somebody is importing it into the country. So when it lands in the country, the price in the country has to equate to that price, because you have to allow the people who are in Nigeria, who have invested so much money, to be able to meet their own costs and have at least some small profit to measure up before you throw everything up into the wind. Now that is the gap that we have. And that is the gap the 15% ad valorem tax wants to fill, so that there is parity. We don't have that parity. And if you continue like this, they are going to attack every other productive capacity in Nigeria, refining capacity, and kill them off. as they have killed off the 4 refineries of
NNPC.
Unashamedly. So that complicity is what is being broken by adding this ad valorem tax of 15%. So that is the story. But then there are ramifications of that story that we can take on when you are ready with your questions.
Okay. Looking at it, thank you so much for giving us the history and getting up to where we are today. If you look and see, you know, new tax laws, that's what we've been talking for a while, and all will take effect from 1st of January 2026. And this one now, 15% petrol import tax is there. Is there any need in the first place for us to think of importing fuel, since the Dangote refinery is very qualified to supply petrol to the entire nation, and some others, these other smaller ones that are, and even some that are coming up, will still do this work? Why must we still import petrol into Nigeria?
The issue is this: there are people that have made it their business to continue to make money. There's nothing wrong in making money, but there's everything wrong if you are making it to the detriment of.
Yes, go ahead, sir. Oh, okay. We'll still get back to him immediately. It's very cleared because there are these facts that are very clear. Okay, let's keep getting to hear from him and just see him alone.
Yeah, what I'm saying is that if you look at it, there's an ugly history behind this. The history is that when the EFCC moved into the subsidy import fuel regime, they found out that there's a huge racket going on there. 30 million liter ship will come to Lagos, discharge 10, they will record 30. They go to Lome and come back, discharge 10 million, they record 30. They do it the third time, they record 90 million against 30 million liter vessel. And that was just a tip of the iceberg. So this was all going on. And so we expected immediately NMDPRA was set up to come and tell us the correct consumption of fuel in the country. They have not done that up to today.
Yes.
Today they will tell you it's 50, 70 million, 80, we don't know. That is the act we don't know. And the opportunity that they actually have to know, when Dangote is rolling out 4,000 to 10,000 trucks, you can equip them with satellite. They don't want to know, not interested. And then we knew that there was something going on when we closed our borders. The petroleum consumption dropped by about 35%. All the countries in that West Africa region, up to Senegal, started crying. Their prices doubled because they were all feeding from the subsidy in Nigerian fuel. Second point, Nigeria is currently, if you add this 15%, which is about 100 naira, to 860, it will come to 962 naira, which is only $0.62. Now, let us compare Nigeria to West African neighbors. Ghana is $1.37 per liter of fuel. Nigeria is $0.62. Cote d'Ivoire is 1.7, and then Senegal 1.7 plus. So these people, Ghana is twice the price we charge in Nigeria per liter, and Cote d'Ivoire and Senegal are 3 times the price we charge in Nigeria. So what is the problem? The problem is, if you want to import, why must you import it into Nigeria? Import the fuel, send it to Ghana and make 200% profit, send it to Cameroon, all these other countries,
yes,
and make 100% profit. So why destroy Nigeria? Because you are claiming money that doesn't exist. You are claiming liters that don't exist. And you're actually dumping substandard fuel in Nigeria. So we're not even comparing like to like. You are dumping them. This fuel you are dumping here do not meet the standards. Even a ECOWAS standard of 50 parts per million sulfur, you are bringing things that over 200, knocking our engines, causing health hazard, all kinds of problems. Why? Why should you continue to kill Nigerians with poor substandard product? That's the big question. Then you now have the case where the government says, all right, let's apply ad valorem to compare like to like. You ask me a question, is it necessary to actually import this? The answer is no, because we already have self-sufficiency. As at this moment we are talking about,
Dangote is producing 45 million liters of PMS. But the chain is only able to absorb 20 million. The other 25 million would have come in if the other marketers agreed to take them, but they are giving the man impossible condition. That's why he's now exporting that extra 25 million barrels everywhere, and he's taking it to the places where they can meet the highest quality standard. Saudi Aramco, Brazil, America, look at them. They are, buying our products because of the extremely high quality, Euro 5. And the new refinery coming in will be producing at Euro 6, the highest standard. So what is the argument? Why would Nigerians sacrifice this? Why would we? So the question now is, in fact, I'm proposing that government should take this further. They should go to the upstream and impose 5% levy on people who do not supply the crude to local refiners, which are the DCO, that is the domestic crude obligation.
Yes.
The PIA law says you must meet domestic crude obligation by delivering crude to refining before exporting anything. They're not doing that. Dangote has 700,000 barrel per day requirement. They're giving him 70,000. Now they have promised they will increase it to 5 million barrels a month, which is 160,000. How much is that even compared to what he needs? Now, in the next 2 years, he will go to 1.4 million barrels. Why must we continue? So government should tax those things that are not sent to him. Let them tax them for that. Because Dangote himself is paying extra $3.5 per barrel extra to marketers to go through the back door to buy their crude. Why should we have that? Why should we have that? And the president should quickly sign the law on 30% mandatory value addition on any of our raw materials, so that will creep in to the supply to the crude. We are not adding any value to crude by sending it abroad as raw material. That the president should sign that, because it has already been passed by the two houses of assembly. There's no need delaying it. Just sign the thing, so that we'll carry the war to them, those who don't think that this country should exist and become an economically strong nation.
Thank you so much, Prof. You see, you have just given the government this piece of advice. I hope and pray that they will listen and make use of what you have just said. Because the fact that we want the economy to get better requires that every hand should be on deck to work on it. Then I also want to ask, why is there no law in this country that should fight such people who oppose the economic well-being of this country? Is there any way it can be created? Because with such laws, these people doing all this that we just talked about today would need to think twice before getting into it. But because everything seems to be free here in this country, they keep sabotaging the country, yet the economy, yet nothing is happening.
No, the laws are there. The laws are there. Is the implementation and the punitive measure to force compliance.
Okay.
That is what's just not there. For example, the PIA law provides the section 771 A and B, gives power to NMDPRA to actually issue regulation to impose public service obligation. In other words, they're empowered by law to do what has just been done. Okay. And then the other one authorizes them to put a particular tariff level that enables them to recover, the PSO. So the law is there. So what the president has now done is, in the same way as we have the law in PIA that talks about domestic crude obligation, is there since last year. The law also says there has to be Naira to crude. In other words, you sell your crude in Naira and then you buy your PMS products in Naira. The law is there. The president allowed it to happen for 6 months. Before 6 months was finishing, they jumped out of it, and then later they brought it back. But the thing is this, they're still not giving the local refineries enough crude, even though the law says that they should before exporting. So the government has to bring tax. Tax is an enforcement compliance tool. When you put it, you must touch a businessman the incentive and disincentive. That's what they listen to. Businessman, what touches their pocket? So when the tax comes in, it touches their bottom line, it touches their pocket. You have seen some companies now saying, oh, it's not wise to continue to import fuel. Did you not hear that from, what's the name of this company now? I'm trying to remember the name, a few days ago, that says,
yes,
it's
NECA.
major.
NECA.
No, it's NECA.
NECA.
It's
NECA.
not NECA. There's a major, it is Owando.
Okay, Owando mentioned this.
Yeah, it's not,
Yes,
it's not
Owando.
good. You know, I mean, if you didn't have this law, this 15% duty, they would not be able to, they wouldn't have reconsidered their position, because they are looking at the long-term impact of this. Are you going to make money, reasonable money, smuggling goods, buying this product, substandard products with a 15% inflation, and the possibility that more law will come on the upstream? So they felt, look, we'll have better business to do. So these are the kind of things you want to see. They're patriotic. Owando is patriotic because they've looked at the reasoning and they found that this is a club that is dominated by, I don't know how to describe them. It's a big club. Yes. That is dominated by people who just don't want to think about economy. They just want to enrich themselves. There's nothing wrong in enriching yourself, but don't let people, don't punish people. That's what is going on in the country right now. And then you have people that have invested so much money, that believed in our country, that believed in the welfare of our citizens, 230 million, and for 2 million businesses, and then you are trying to crucify the investor. How are you going to invite more people to invest? So you will now see that because of this tax, more investors will now look into investing in, even buying the refinery. Now, NNPC, they will be interested now to take over NNPC refinery, to bring more investment in the downstream and the midstream, and then build more modular refinery, because they can see that the price is stabilized and they can make money. Okay.
The current thing about the NNPC is that it's being offered for sale, is it not? Do you think it is buying it at a time like this, considering the pipelines that are not working and other things that are working? Is this still economically viable for it to be sold or shut down completely?
No, you can't shut it down completely. It is viable to, the first people that is viable to is the unions. Okay. I'm advising them to have a management buyout. The that man of this world, Pengassin,
yes,
I said,
Pengassin
go and buy it from government. And I will ask government to give it to you free. Dangote paid, and his group paid 750 million for this.
Yes.
In 2015, and then they pressurized. They wanted to go on strike. They stopped it. They scuttled it, and our president gave the money back to this, the 750 million back.
Yes.
And I'm saying to them, go and take it and run it. Management buyout, you have it free. Go and run it. Go and bring your foreign partner. Also, go and get the oil majors. There are 5 oil majors that are doing all the time importation. Yes. Get together and take over this thing. Because you have tank farms already. And you see, when private sector are doing it, they're doing it as their own. I'm telling you, this 3.5 billion they sank there. If the private sector had this money, they will get all the 4 refineries working. Because they will know why they're going to cheat themselves of the money that they bring in, they're borrowing. They will build it and it will work. And they'll supply the refined product to their tank farms, from which they can export to neighboring African countries or anywhere far and wide, and then also import it, sell it to Nigeria. So it is better for them to come together. They can also bring their foreign partners to do this. They're in the business. Unless you put tax or something serious, you will not drive them to go and revive this project. That is the answer. It can be done. Because after all, it occupies land. Do you know how much you pay to acquire this type of land? You cannot tell me that all the vessels in the refinery are all dead. If a machine is dead, the tanks. How about all the other equipment, pipelines? Oh my God, there's so much asset. They have intrinsic value that those who are involved know what to do. But if it is government business, they will balkanize it. They will continue to balkanize it. Because government business is no man's business.
Oh, thank you so much, Professor Kenife. It's been a pleasure sharing this moment with you, and sharing it has given us a lot of exposure into the things that are happening. We'll still call you back, maybe this time when you'll be able to come into the studio. So we'll talk more on this and see what is happening. We are grateful to you. Thank you so much, sir.
Thank you very much.
Thank you so much. As always, do come again, Prof. Right.
Thank you.
Right, sir. Oh, well, that is it. We've been talking with Professor Kenneth, of course, the ECOWAS advisor, chief advisor when it comes to economic matters. So he knows how it affects us. And being someone that is versed in all this, a lot will come out of this, I believe. We'll still talk more. But right now, we will need to take what we have from our newsbeat. The federal government, through the Presidential Fiscal Policy and Tax Reforms Committee, has introduced a new CGT framework that experts say will make investing in the Nigerian capital market more rewarding and fairer to both small and institutional investors. The reform, which takes effect from January 1, 2026, replaces the old one-size-fits-all structure with a progressive system that aligns with income tax principles. Instead of the flat 10% rate, investors will now be taxed based on their total income or profit level at rates ranging from 0 to 30%. More importantly, the new framework allows investors to deduct legitimate costs incurred in the course of investment, such as brokerage fees, transaction charges, and margin interest, as well as to offset realized capital losses against gains. This means investors will be taxed only on their net profit, not on gross figures that ignore market realities. For many in the market, this represents a long overdue step towards fairness and efficiency in Nigeria's tax administration. Small and medium investors stand to gain significantly under the new rules. Transactions where total sales proceeds do not exceed 150 million naira and total gains are below 10 million naira within a 12-month period will be fully exempt from CGT. The same applies to investors who reinvest their proceeds into shares of Nigerian companies within 12 months of disposal, as well as institutional investors such as pension funds, real estate investment trusts, and tax-exempt non-governmental organizations. Small companies with annual turnover of 100 million naira or less will also continue to pay zero CGT. The reform also introduces a cost-based reset for existing investments. For all shares held as of December 31, 2025, the cost base will be determined as the higher of the original purchase price or the market value on that date. This ensures that only future gains, those accrued after the new law takes effect, will be subject to tax, preventing retroactive taxation and preserving fairness for long-term investors. Analysts say the reform is more than just a tax adjustment. It is a confidence-building measure for Nigeria's capital market. By clarifying exemptions, simplifying compliance, and harmonizing CGT with income tax rules, the reform reduces uncertainty and aligns Nigeria more closely with global best practices. Investors will no longer face the risk of being taxed in loss-making years, while market participants such as brokers and fund managers can operate with clearer tax guidelines. The government has made it clear that the reform is not designed to raise immediate revenue, but to create a fair, predictable environment that supports investment growth. By encouraging reinvestment of capital and protecting small investors, the policy aims to deepen participation in the market and attract long-term funds that are critical to economic growth. As global oil prices have sharply fallen now, hovering just above $64 per barrel, the Central Bank of Nigeria, led by Governor Yemi Cardoso, is moving swiftly to shield the economy from the adverse effects of this decline. For an oil-dependent economy like Nigeria's, this persistent slide in crude prices poses significant challenges that require immediate and effective measures. Nigeria's economy heavily relies on oil exports, which represent a substantial portion of government revenue and foreign exchange earnings. The recent dip in oil prices raises concerns about budget deficits, inflation, and overall economic stability. In response, Governor Yemi Cardoso has outlined strategies aimed at mitigating the potential fallout from these reasons. As oil prices remain below comfort levels, the CBN faces the dual challenge of stabilizing the naira and maintaining the economy. Governor Cardoso is advocating for a diversified approach to reduce reliance on oil by promoting non-oil sectors such as agriculture, technology, and manufacturing. This diversification is vital for creating a more resilient economy that can withstand global market changes. Additionally, the CBN has introduced measures to enhance forex liquidity. By ensuring that foreign exchange is readily available to businesses, the bank aims to curb inflationary pressures that could arise from a weaker naira as oil revenue declines. To shield the economy, Governor Cardoso has implemented several key initiatives that focus on both immediate relief and long-term growth strategies. One of the main interventions includes increasing access to credit for various sectors, particularly agriculture and this move aims to stimulate growth and employment while reducing the economy's dependence on oil revenues. The CBN is also keen on bolstering its collaboration with fiscal authorities to ensure coherent policy responses. By synchronizing monetary and fiscal policies, the CBN can help stabilize the economy and promote sustainable growth. Another pressing strategy is to enhance local production capabilities. Investing in infrastructure and supporting local industries will not only provide jobs, but also reduce the need for imports, thereby strengthening the naira and protecting foreign reserves. Governor Cardoso emphasizes the importance of building the economy that can thrive independently of oil prices. Well, it's good you've seen this, and we hope we'll get to have all these work out well for us. Well, straight away, we'll just take it from the news, from the business news. Then we will as well get into the stock exchange and a bit of monetary discussion. Let's just roll these as we go on.
The Nigerian Electricity Regulatory Commission, NEC, has reported a rise in active electricity customers reaching 11.96 million in August 2025, up from 11.89 million in July. Metering coverage also improved slightly to 55.01%, with 6.58 million customers now metered. ECO, Ikeja, and Abuja Discos led the way, recording metering rates of 84.25%, 84.83%, and 73.92% respectively. NEC also noted that 70,888 new meters were installed in August, supported by Tranche B of the Meter Asset Financing Scheme, worth 28 billion naira, targeting unmetered premium customers. The regulator highlighted ongoing reforms to enhance billing transparency, reduce estimated billing disputes, and strengthen consumer trust in Nigeria's power sector.
Welcome back. Straight, we'll look at what we have from the stock exchange, after which we'll now talk about the monetary talk. And from the Nigeria Stock Exchange, well, we have the all-share index, just as you've seen. There is a serious downturn of matters as far as the stock exchange is concerned, and we hope that there will be things that will transform that situation in no distant time. 141,337.3 happens to be all that happened. And looking at the value traded, 29.4 billion naira was traded. And shares, volume of shares was 658 million, while the market capital in naira was 89.89 trillion naira. Again, we will go ahead to look at the others. We will be able to look at the three top active traders. We have the First Holdco traded 2.1 billion, while Access Corp is traded at 1.1 billion. We also have Zenith Bank trading 2.3 billion, and that is just the much we will go for those ones who are the top active traders that are three. Now we have the stock top gainers, NCR 21 naira 25 kobo per share at 9.82%, while Berger has a 36 naira 2.56%. FTMB 10 naira 50 kobo at 0.96%, while Mansard Insurance at 12.10 at 0.25%. That is it. Well, we want to move straight away to look at the oil sector. And in the oil sector, the WTI West Texas Intermediate goes for $60 per barrel, $60.78 per barrel at 0.61 change rate, and at the percentage of 1.08%. We also have Brent crude at $64.89 at an exchange rate of 0.664 change rate rather, and the percentage of 1.06%. Melbourne crude and Bonny Light. Melbourne crude is at 68.94, while we know that Bonny Light has been that way for there is a great change, which will definitely from subsequent editions show you when as it comes to Bonny Light. Well, still on with what we have, we will be looking at the monetary matter at a time like this. We want to check and let you know the money business, how it has gone for a while. The dollar rate to the Naira exchange rate, dollar to Naira exchange rate really, the Naira traded slightly weaker in both official and parallel markets yesterday, and with the daily Nigerian foreign exchange market, NAFEM and NFEM, fixing around 1,437 Naira per US dollar, while Lagos parallel market dealers and even Abuja, all these parallel market dealers went for 1,455 to 1,465 per dollar. The official NFEM rate, rather, NAFEM rate, the Central Bank of Nigeria's volume weighted benchmark used for large ticket and corporate flows, was reported at about 1,437 Naira to the, while street and parallel market sellers and other commercial hubs were typically selling for about 1,455 Naira, with some outlets and data services reporting occasional trades of 1,465, from 55 to 65. The gap between the official NF fixing and parallel market quotes has persisted this week, leaving a premium of roughly 18 naira to 28 naira per dollar, depending on the source and time of day, a sign of continued demand pressure in cash markets outside formal windows. Market participants said limited FX supply for small cash needs and steady demand from importers and retail buyers kept pressure on street rates, even as institutional windows remained relatively firmer. Analysts and market data providers noted mixed liquidity across trading venues, with the formal NAFEM and I&E windows handling larger corporate flows, while the parallel market continued to set cash prices for everyday buyers. Oh, well, that's it. We'll be saying that we'll be done with that, and we'll just be rounding off what we've got with you on the program today, really. And the way it has been, we've been able to do discussion. But whatever happens, we will still do a lot more some other time on the program. I want to say thanks to you for being there, and again, especially thanks to Professor Kenife. Thank you so much. The great professor that has assisted us here richly in getting this information clearly for everyone to see. And we also thank you for being there. On behalf of everybody that has worked with me today to ensure that we got things right, I want to say thank you. Sam, Ihanyi, Ephraim, and Joseph Chediku, and the others all around. We thank you all for being there and for assisting. Victor Adeye, thank you so much. And Idego, thank you. And everyone else that has worked one way. Victor Chiza, thank you. And Felix Akinjagula. Let me thank Ruben Okala and all for being there. And Wahid Odushile is the executive producer. Okay, here. What do I say? May the best happen to us all the time.
If we had a better structure, I thought I had some kind of stuff in mind to say geopolitical zones. And we had a plan that every geopolitical zone must have a power station, for example. That means we have a minimum of six strong power stations.
Yes.
It's very important that we embrace these investors.
I think what they want to do now is to be able to make them understand that, look, going forward, it's not going to be business as usual. Yeah. Whatever that may be happening in the past, we want to now be able to put a system in place that will checkmate, correct the ills of the past, give us a new pedestal from which to stand and operate going forward.
Official